So, before moving to the Q&A panel that we're going to have in a minute, always when we have some kind of a change of a scenery and a kind of different kind of format, people always forget that kind of, we are having bodies, so it kind of also needs the physical change so we can actually move our attention to that. So I would ask you not to jump, not to massage anybody, none of these things, just to switch your seat. So sit next to you, just switch the place you're sitting at quickly. It can be a big switch, it can be a smaller switch, a place next, whatever is fine with you, that's cool. Okay, and we're getting there. So this is very important, and when we are building our businesses and when we are growing our startups, one of the key points is actually getting out of our shoes and changing the perspective. So not kind of listening only to our logic and reason or the sanity of our own team, but rather actually also asking people around us different things in the sense of, hey, what do you think about this? How do you think I should do that? And actually being open to different kind of opinions, expertise, knowledges, experiences, how would I like to put it? So, with a huge pleasure, I'm opening the next panel, which is not going to be a classical one, but rather a QA one. So I would like to invite to join me on the stage Inbal, Marta, who we had on the morning block, and both Frank and Bill. So you can join me on the stage. Thank you, guys. Your spot. And we were missing the 4-1. Is Marta here? Marta? Hello! Do join us. Oh, sorry for the unintentional misspell. Yeah. So, we were speaking about, here you go. So we were speaking about getting an investment to launch yourself in the international market. And we know that we have some startups in the audience. So we actually like to know what are your questions or what are you interested in to find about from our wonderful experts and mentors. So besides if you miss the break or if you have a good question you would actually like to address it, next, let me check, 25 minutes is the right place to do it. So looking for the first volunteer to break the ice. And Milos, here we go.
Test, okay. So hi guys. First of all, thank you for all your presentations. It was interesting. Just to clear again, I'm Milos from Sportifico. We are a startup from Serbia trying to change how people connect in sports area. We have a wonderful product that's been loved by our users, and now we are thinking about how can we go above our current market, our local region, and how to, from Frank's presentation, when the fundraising and growth go hand in hand, how would you, if you had a good product in Serbia, in this region, tackle the challenge of going outside, tackling some bigger markets, maybe USA, maybe European markets, just it doesn't matter at this point, but how would you guys do it if that was your case with your startup? Thank you.
So 3 points, I think. The first one, do you have product market fit? Sometimes companies think they have product market fit, but actually they don't. So what is the critical mass of users that you have in your market? Is that good enough to show that you can sustainably replicate that model in other countries first? Okay. And I'm telling you that 90% of the startups that want to raise a bigger round to do that, they don't have this. I can openly say that. And not just in Europe, all over the world. So that is the first point. So we cannot complain if Series A investors, for example, are not giving us money, because if we don't do our homework, it's not going to work, first. The second one, how to choose the market. That is something that is very tough to say, and I'm not an expert in any of the markets, even if we do business in 33 countries. I cannot tell you which is the best market for you. You have your own product, your own timing, your own team, your own experiences. I cannot tell you, and you shouldn't trust anyone telling you, because if they tell you, they have some side interest, a political, an economical, whatever it is, but there is an interest. So, before doing any step, going to any event, doing any soft landing, scouting, whatever, do experiments. Experiments, they're very cheap. Okay, you remember Blinkist, my case, when I presented in Varaždin? Okay, they just tested in 60 countries with Facebook ads. Have a look what people think. Okay, and then they get click-throughs, they get sign-ups, they get people have a look at what you're doing, and then you get an idea if it's interesting or not. That's a much better information than any consultant, any expert could ever tell you. That is something that you can do yourself. Now, how to test it, with which channels, how much money you want to spend into, that's a very specific question. That is something that you need to know, and if not, then you need to have like a framework how to do that. That's the thing. And then I think, yeah, with the second point, I also answered the third point. So that's my take.
Thank you.
Yeah.
And for the Blinkist, I'm using it and I'm loving it.
Sorry?
For the Blinkist, I'm loving it, I'm using it.
Yeah, I mean, if everyone would be like them, then the startup community in Europe would crush the American one. I mean, these are real or European, German entrepreneurs, okay? Known for no risk, everything is well done, but these guys are just crushing it. And the idea of the whole growth engineering framework, for everyone, Blinkist.com, Blinkist.com. If you look for it on Google, you can understand what I'm talking about. These guys just did it by the book, you know, experimentation. When they were super early stage, experimentation. How do I get the first customers without having a product? They had customers without having the product. They were paying for the small book summaries. They were putting them on Amazon on 0.49 euros. And just as a small books, like 10 pages ebooks. And that was their early validation. And then they were pushing experimentation, product market fit, push, raising money. They were raising money every year. One raise on 2016, one raise 2017, one raise 2018. Now they will do a raise 2019. So it's very systematic. Are they in events? No, they don't go to events. Do they have advisors? No, they don't have advisors. They do everything themselves. They know how to do it. And this is a growth framework, a growth mindset. Okay? So again, think about it. Try to do experiments. When you find something, push. Okay?
Thank you.
Can I add to that? There are many programs and many accelerators in all of the sectors you can think of. If you're doing a sports startup, then look for the accelerator, look for the program that is with sport, that is connected with a sport company. There are Adidas and Nike and so many, and then you can go for a program. It can be 3 months, 8 months, it doesn't matter. One of you guys will move, and you will get so much connected and so much network out of that. I know startups who just move from one accelerator to another, from one program to another, the first 2 years. They don't only get to build their program, they get to step to the next stage while making a lot of networks on the way. So the first time that they want to raise money, they go back to the program founders and they get their money. So they got 2 birds at one time.
Thank you.
So I'm going to direct this question to Mr. Bill. So there are a lot of startups in this region who are technically very competent, but don't necessarily know how to talk to a customer, how to identify a customer, what to ask them. You've got a lot of experience doing just that. What pieces of advice can you give people who come from a more technical background to help them understand how to wear more of a marketing hat?
Okay, so Thank you, John. For
Welcome,
those
Bill.
of you who don't know, John and I go back about 25 years at this point, and he likes to ask hard questions in public. So there's sort of two things here. One is if you're in a startup right now, and the other is how do you prepare to be in a startup in that role? And I'm going to address the second one first. And it boils down to work with sales. You know, whether it's being a sales engineer, whether it's managing sales, whether there's a whole variety of things you can do to get used to talking to the people who are using your products. And you can do that even when you're not in charge, even when it's not your startup. But it requires a set of conscious decisions. So a great example, if you go to Silicon Valley and you go into the engineering area, frequently people will be dressed really badly. They will be wearing torn jeans or shorts. They may or may not be wearing shoes. If they're wearing a t-shirt, it's faded, torn, and has a logo of some dead company on it. And if you look at that and you say, is the sales guy going to bring this guy to the sales meeting at Wells Fargo, a major bank? The answer is no. You do not bring the guy in flip-flops to the enterprise sales presentation. And so that guy in flip-flops is never going to be in a customer meeting, is never going to be in front of a customer, is never going to learn how to talk to a customer. And that guy in flip-flops is probably feeling really good about that decision because he don't want to do that. But if you want to have a startup, you have to talk to the market. And it begins even before you have the startup. It begins at your job where you're the person who smells good, is dressed presentably, and when a sales guy says, I need somebody to come with me to the site, you say, let me check and make sure nobody wants me here today, and then I'll go with you. And the first 24 times you do it, you'll be sitting there going, I don't belong. What are these people? Did they just use the word synergy with 3 different meanings in that sentence? And it's okay, because about 20 meetings in, you'll start going, and you'll be the person using synergy, and it'll all be okay. And you need to do that. If you want to be a CEO of a company, and you're from a technical background, you have to be able to sell. And you have to understand what the customers are saying, and you have to be able to talk to them, and that means you have to start even before you found the company. So that's the first, in reverse order. Now, if you currently have a company, and you're not sure who your customers are, and you're not sure how to talk to your market, that is an enormous red flag. If you don't know why people want your product, then you don't have a company. If you aren't sure who's going to buy your product, then you don't have a company. And the first thing you need to do is you need to say, the thing I'm building is for this person as specifically as possible. And then you have to say, will they buy it? And why will they buy it? What's going to motivate them? Because the other thing is, a lot of times, you know, the person you're trying to sell to has no motivating factors whatsoever to buy it. You know, they're a mid-level manager in a large enterprise, and if they buy your product and it fails, they're going to get fired. But if they buy your product and it does well, they're not going to get a raise. So those people are risk averse. And so you have to actually be able to say, I know who I'm selling to, I know why it's going to make their company better, and I know why they personally are going to buy it. And if you can put those things down in concise form, then you just got to get over the shyness and go talk to them. And there's nothing else to do other than if you understand why they're going to buy it and you understand their personal motivations, and you know, the first 24 times you try and sell it, you'll fail too. And you'll walk out of that meeting, that's what I should have said. Damn. So don't start with your best prospect. It's a little bit of advice there, but you just do it, John. At the end of the day, you just got to get out there and do it.
So the message is, in the first case, don't pick Dave McClure to go with you on a sales call, and in the second case, be willing to fail. Is that the takeaway?
Not just be willing to fail, but be willing to put yourself in the mind of the customer, understand why it is that they would buy it, and then be willing to fail as you try and articulate that. Because the other thing is, you go to this person and you say, here's what I'm doing and here's why it's important to you, and they go, no, that doesn't matter to me very much at all. And you go, okay, what would have made this compelling? and take notes, and then when you go on the next one, try the new sales pitch. And always put yourself in the mind of the potential purchaser. And it's not rocket science, and it's not like, you know, people are out there in the audience right now going, wow, Newton, Einstein, Grosso. No, it's just you got to do it. And I killed the audience completely.
Hello, my name is Mladen. I'm CEO of VetGuide software for veterinarians. For our first two markets will be USA and UK. So I wanted to ask you a question. Is it better to wait for big investment or to try with small budget for marketing? And the other question is, if we've already protected copyright as intellectual property, do we need software patent in USA? Thank you very much.
Did you understand the question?
Restating the question, there were two questions there. Question number one was, we have a product and we want to go into the US and UK. Should we raise a big round before trying to do that, or should we go incrementally? And question two was, we have some sort of unique and differentiated technology embodied in a software algorithm, which we have copyrighted. Do we also need a patent? Yeah, in the United States.
No, well, I would tell you to go, like we say here, Polako, Polako. Like, I wouldn't start opening two markets at the same time. I think you need to focus, as we were saying during this event, go to the market, listen to the market a lot, and then learn from it. And when you feel that you are ready, then you can raise more funds. Having said that, I would like to point out that the majority of the entrepreneurs that I see have not made a proper calculation about their funds need. So they raise funds, but they can be like short or long, which is not ideal. So make an effort to or make the exercise of thinking, okay, what's the budget that I need? When do I need this? And why, and which are going to be the milestones, no, to show to my investors. This is very important for me. Not having a good perception about what's your barn capital. It's, for me, it says a lot, no? So.
Yeah, sure. I'll start with the second one. Most of the startups, the software startups that we see today, do not go with a patent. It's very costly. And they don't want to get it out there. They rather get market share. So they will work on the software, they work on their technology, and if it's not deep technology, just it's better for them to get started marketing. As to the first question, as an angel investor or any investor, we want to see strong startups. We don't want to see startups coming that they have low budget in their bank account, right? So it's a question that we ask, how much money do you have in your bank account right now, and for how long will it take you? What's the burn rate? If you are trying to get into a bigger round, to get VCs interested in you and so forth, you should have money, enough money, to come and negotiate your terms, right? So sometimes it's better to do like an extension of your previous round to get more, to the next round stronger, talking about finance. We really don't like investing in startups that are raising little by little by little, because as an investor, I'm diluted every time, and not for the right reasons, not because the valuation is going up, just because you're running out of money. I will invest only in startups that are raising enough money that will keep them, will go all the way, all their KPIs to get to the next round. So sometimes they come to us and say, I want to raise like an early stage, right? Pre-seed and seed. rounds. So they want to raise $500,000. We said, I'm not going to invest. You've got to raise now $1 million or $1.5 million to get to your next round. So it's important. This is a relationship. You as entrepreneurs and startupeers and us as investors or business investors, we've got a relationship here. You've got to also know what are we willing to take along the way. At the end, it's business and we want returns. So if we'll be diluted all the way across until we get to the exit, then it's not good business for us and we will never invest in you and your next startup.
So just to go back to the patents for a moment. There's a lot of mystique around patents. Fundamentally, you have to ask yourself what it is you're buying when you buy a patent. As a startup or a small company, you are never going to be able to aggressively prosecute your patents. They are not this magic weapon that enables you to make money after your business has failed. And no matter how good your patent is, Microsoft has better lawyers, period. The only use for patents as a startup, and that's maybe a little strong, and I'm not a lawyer, so all that, but the only use is if you don't trust your customers. So if you're an enterprise startup and you have unique and differentiated and patentable technology and you're selling into a vertical where you think your customers will rip you off and reverse engineer no matter what the contract says, then they are a very good defensive club. And the question you have to ask yourself is, it's going to take me 3 to 5 years to actually get that patent. It's going to take me more than $100,000 in the good case, because I'm going to have to write the patent, I'm going to have to file the patent, I'm going to have to file the patent globally. At least half the patent offices will have somebody who says, I don't really get this, and reject it, and then you have to prosecute the patent. And so you're looking at 3 to 5 years and $100,000 to have a sword to attack your bad customer. And it could be worth it, but decide. If you're an internet consumer, there's no reason whatsoever to have a patent. If you're an enterprise with differentiated technology and customers who have a history of acting in bad faith, then potentially, then know the cost.
Yeah, in medical, I think medical is also, of course, that you've got to have a patent, right? I would never invest in a company which is a medical and has a breakthrough and doesn't have a patent.
In some cases, and when you don't have money, instead of patenting, you can publish, and in one of the known journals, and this is going to protect you when somebody wants to patent something. But it wouldn't apply for software in your case, and software is only, I mean, you can patent everything in the States, but only in the States.
That's just to sort of be a little controversial. Your point earlier was, the other thing that you can do instead of patenting is you hold it as a trade secret. You do not tell anybody about it. You document it internally so that if someone accuses you of patent infringement, you can say, no, I was doing it before that patent was filed. I just kept it as a trade secret. That's a pretty good defense. But as soon as you publish it, then the world knows. And once the world knows, there's going to be hundreds of people who work for less money than you and who are willing to copy what you're doing. So publishing it is a very good defense against you're infringing my patents, but it's a horrible business tool because it lets the trade secrets into the public domain.
No, yeah, I was not talking about Coca-Cola. So, I mean, it's you need to, I mean, this is a very good point. You need to see what do you want to patent. So of course, if it's like Coca-Cola, this is going to apply, or any food, or any process that implies a formula. But if we are talking about other sort of medical devices or other products, you could use it. I mean, I'm not saying it's the best option, but well, it's better than nothing. And I've seen nothings a lot. No, it's true. Every time that I make an evaluation and then for the European Commission, I see a lot of projects that are really amazing, but they don't have any intellectual property policy implemented. And that's really dangerous. So, I mean, the summary would be do something.
Hello, I'm Milan from Startup Host. My question is, many startups today face problems with language barriers when expanding to international markets, for example, India and China. So my question is, do we need to translate our ads and content and adapt it to the local markets? Thank you.
I think it was startups face barriers as they enter different geographies and locales than the one they're native to. What is your point of view with respect to localizing content and doing translations? Is that right?
Do it, it's easy. Absolutely. Well, I think you should do it. If this is a market that you want to, you know, do it. It's not there is software today, very easy to getting your. I don't know if you've got an app, you've got a site, or your whole platform. It's easy to translate. Do it, of course.
So one of the things that people often don't realize is that translators are incredibly cheap. Even if you don't do it yourself, you're talking about pennies per word. And, you know, there's a lot of service bureaus and they give you 72-hour turnaround and they charge you nothing. And even if you're just, you know, if you're going to pitch and you're going to pitch in China, have your deck translated. You can find somebody on the internet who'll do it. You can find 3 people who'll do it. Then you compare the characters if you don't know the characters and, okay, all 3 said the same thing on this slide. Do it.
I've seen a very good project failing because of the stupidity of not translating manuals in Portuguese because they wanted to be in Brazil. So yeah, it's I would even elevate this to respect. So if you want to penetrate a market, you better know about the market and you better follow the rules. And the first rule is that they understand what you're selling, right? So if you don't translate, they won't understand
it. One point. Yeah. If you're thinking about going to China and India and you ask yourself this question, you're not ready to go to China and India. Okay, so there should be someone in your company that is telling you already these kind of things. So I think it's not just translations. Especially for China or India or Asia, when there are clashing cultures, there are different channels, different formats, different colors, different way of doing media. Validation can be different. The freemium kind of strategy can be different. People might pick up things when they're paid and not free because they give them value. There is a lot of things that you think about, that you need to think about, but totally you need to localize it. I mean, for example, if you want to sell something, you want to do an experiment in China, you don't go on Facebook, you don't do Google. There is no Facebook, there is no Google, so you have your marketeer that knows Google, Facebook, and other stuff, and in China it doesn't work. So, do you know Baidu APIs? Do you know WeChat? Do you know how that works? No. So, in the end, content is only a very small part. And then why go to China? I mean, if you ask yourself this question, it means that you didn't run experiments. So do a little bit of homework first. Why China? Then do experiments with whatever kind of content, and then think about, okay, now are we going to enter the market or not? Okay, so. Always think first before going to this market. It's true also for European countries. I mean, if you sell in Serbia and you go into Italy, Germany, or the UK, it's 2 different cultures. A German thinks different than an Italian, even if we're in Europe. It's not just language.
It's culture, sure.
Well, elaborating on this, I would like to explain you what happened to me. When I was 29, I was named CFO of a company. And when I got into the company, this looked like more the Club Med, like they were really relaxed, as you say, like kind of flip-flops. Everybody was happy, but the company was a mess. So what I did, that was a mistake from my side, was to break the culture. And 3 years later, the company, I mean, I put the company really at high level, but I was out of the company because I was not feeling comfortable. So keep in mind that the culture is very important. And it was a mistake that I made when I was really young. But 3 years ago, I saw somebody who was in their 60s doing exactly the same in a company that, well, in a big institution. And she was out also in 1.5 years. So culture matters, and it matters a lot.
Thank you.
Now we're moving to a small 15-minute break. So get your juices flowing, grab some coffee, stretch a bit, and see you back here in 15 minutes. Thank you.